welcome. You're watching the Money Control Show. I'm Sakshi Batra, and over the next half an hour, we'll talk about macros, markets, and money. On the show today, we'll talk about all kinds of personal insurance that you can make use of. We'll also talk about the GST Council slashing rates on under construction residential properties and how home buyers will be benefited. And we'll get you insights into the stock markets and the cues you need to watch out for in the coming week. We discussed two of the most useful insurance policies in the past 2 weeks, health and life insurance. But did you know that you can insure almost anything and everything apart from your health and life? Your property, for instance, is one example. To know more about such other policies, I have with me our insurance expert, Mr. Abhishek Bondia, co-founder and principal officer of Secure Now. Thanks a lot, Abhishek. Good to have you back on our show. Now, before we dive in, I want to tell you about what are the major policies apart from health and life that all of us can really make use of in our daily lives.
Sure. Firstly, Sakshi, thank you so much for having me back on your show. Apart from health and life, I would recommend a user to have at least 3 of the insurances, which are personal accident, motor, and home insurance.
All right. So these are the 3 insurance policies, and we'll talk about all of them in detail. Let's start off with the personal accident policy cover, since that's really important. Yeah. I'd like you to first expound upon what is the really importance of having a personal accident insurance cover.
Sakshi, if you look at a personal accident insurance cover, it essentially covers your disability and death related to an accident. This is one of the few plans where benefits are both at the time of death of the individual as well as survival benefits. So in case the person dies out of accidental death, the nominee gets a lump sum. However, if due to the accident the person suffers a disability, then a predefined sum would be paid to the insured himself or herself to take care of their loss of income.
Absolutely. But how much of a personal accident insurance cover should one ideally have? And how does it really work if already one has an insurance cover, maybe a health insurance cover?
So personal accident is completely independent of health insurance. It has a little bit of overlap with life insurance to the extent that in case of an accidental death, a life insurance also gets triggered. But a personal accident is slightly wider cover specific to the accident. So in case you have a life insurance, then the kind of amount you should look at is about twice your annual income for personal accident policy. In case you do not have a life insurance policy, you should look at a cover of minimum 5 times of your annual income for personal accident. Right. Now, with respect to health insurance, it is completely independent. There is a small overlap with medical expenses linked to accidental insurance, but otherwise, health insurance and personal accident insurance policies work completely independently.
Absolutely. Now, let's talk about how motor insurance and personal accident cover was already unbundled by the insurance regulator last year. So, asking about that, you know, one needs to now have a personal accident cover no matter how many vehicles you own. But for each vehicle you own, you need to have a motor insurance. So, how does it really work?
Recently, the personal accident policy was in a way made independent of the motor insurance, where one has to compulsorily buy a personal accident cover of 15 lakhs, irrespective of the number of motor insurances you hold, which is a positive development because the level of cover has gone up. Now, when you look at the motor insurance, which is much more focused on the car or on the bike, it has nothing to do with personal accident, but much more to do with the damage to the car, which is owned by you, and also the damage that your car may lead to a third party.
Absolutely. Now, let me ask you to expound something more about the motor insurance policy. So, if you have a motor insurance cover, does it actually cover the damage to your own vehicle in case of an accident, or does it also cover the damage caused to the other vehicle in the accident?
It does. It actually can cover both. Okay. So, motor insurance has 2 components, the own damage section and the third party section. The own damage section is meant to cover your own car, which could suffer a loss due to, while driving on the road, or it could suffer, a loss because of theft or fire in the car. The second section, which is the third party section, is a mandatory cover that you need to buy if you own a car. The third party section covers loss that your car may cause to a third party in terms of either a property damage of a third party or a bodily injury. In case either of the two happens, the third party can go to the court and claim compensation.
Right. Now let's talk about the third policy that you mentioned, that is home insurance. I want to ask you, what is the importance of it and why should everybody have it?
Average man would invest all their life savings in a home.
Absolutely.
And it makes sense to cover your house against any kind of external damages to the extent possible. And a home insurance does exactly that. It will cover a range of perils. A standard home insurance can cover about 12 perils, including fire, flood, riots, malicious damage to your house, earthquake. So to cover against any of these perils, you have to buy a home insurance.
Right. Now, Abhishek, also tell me about, as to, you mentioned about some of the natural calamities that were, so does it also protect you against theft?
Yes, it can. So if you think about home insurance, there's a structure of the house and then there are contents. The contents can be insured against both burglary and theft for marginally extra premium on your standard home insurance.
Right. And lastly, Abhishek, I want to ask you about all these insurance policies is fine, and the importance also you've told all the investors and viewers watching this show. But how does the claims process work? Because that is really important, and that is where all the investors really get stuck. Yeah. So what are the fine prints that all of us should really read about, should know about, or be aware about whenever we go ahead and buy these policy covers for ourselves?
That's a very pertinent question, Sakshi. The reason why somebody is looking at insurance is to make a claim.
Yeah.
I would advise 3 points to viewers. Number one, if you look at exclusions, every policy would have some unique exclusions, but our regulator has done a fair job in ensuring that exclusions are reasonable. So if you look at personal accident insurance cover, it will have an exclusion for drunken driving. It will not cover that. So the level of exclusions are quite reasonable.
Okay.
That doesn't get covered. Number two would be when you're looking to buy a policy, there would always be few add-ons that you should thoughtfully consider. For example, on motor insurance, you would have an add-on called zero depreciation, which I highly recommend. That ensures that you get you can maximize your claim amount and minimize the deductions. The third point, which is very important, is that insurance is a highly technical subject matter, and you should take expert opinion before you buy an insurance. And your advisor should not just help you buy the insurance, but should also help you to make a claim when the need arises. If you're able to take care of some of these points, then you'll have a much smoother claim experience.
Right. Thanks a lot, Abhishek, for sharing with us all that insight about the insurance policies that all our viewers and investors can make use of. Moving on, the GST Council on February 24th slashed tax rate on under construction residential properties to 5% and for affordable houses to 1%. Watch our special insight to find out more. The Goods and Services Tax Council has cut tax rates on under-construction houses to 5% from 12%. The GST rate on affordable housing has also been lowered to 1% from an effective 8%. The lower rates, however, will come without input tax credit benefits. The builders will not be able to claim tax credit on inputs such as steel, paint, cement, etc. The argument for lowering GST rates without tax credits is based on the feedback that builders were pocketing the gains without passing on the benefits to customers. The new rates will come into effect from April 1. Under construction houses that are priced at 45 lakh rupees or below will qualify as affordable houses. Houses with a carpet area of 60 square meters in metros and 90 square meters in non-metros within the 45 lakh rupees price cap will qualify as the affordable houses. According to experts, the tax cuts will likely bring down prices by 6 to 7% depending on the category of houses. The lower rates will be applicable for under-construction property or ready-to-move-in flats where the completion certificate is not issued at the time of sale. Properties for which construction has been completed attract stamp duty, not the GST. According to Anarock Property Consultants, there are 5.88 lakh unsold under-construction houses in the biggest 7 cities of India, of which 34% are priced below 40 lakh rupees. Buying your dream flat could be cheaper from 1st of April as the government has not only slashed the GST rates on all under construction flats but has also widened the definition of affordable housing segment. Let's straight away go across to our policy expert Gaurav Choudhury to find out how good a news is this one. Thanks a lot, Gaurav. Appreciate you joining in. Now, first of all, tell us, what do you think about the GST rate cuts really?
Well, this was something that was on expected lines, and we know that this has been in the works for some time now. There was a group of ministers, group of finance ministers from within the GST Council that was specifically set up to look into this issue, and the consumers have been saying that the builders have not been passing on the lower the GST ITC benefit, the input tax credit benefits of GST, and the real estate industry has been saying that the incidence of GST is quite high, so that has affected demand. The GOM actually went into the whole gamut of issues, made a string of recommendations. Those were taken up by the GST Council, and then they decided that they will bring down rates, lower rates, but without ITC benefits. So, say for instance, under construction houses, GST has been brought down from 12 to 5%, and for affordable housing, it has been brought down from an effective rate of 8% to 1%, but without the input tax credit benefits. The reason that the input tax credit benefits have been done away with is based on the feedback that both the council and the GOM had been getting, that the builders have not been passing on these benefits to the consumers and actually have been pocketing these gains. So now it probably tidies up the system, and it remains to be seen to what extent prices will come down. But experts that we have been speaking to says that in both the segments, both under construction and affordable housing, the final cost of houses should come down by anywhere between 6 to 7% at least.
All right, so the prices will come down, and that is a big cheer for the home buyers. But just now, how you said that the input tax credit benefit will not be there, do you think the construction costs will rise for all the developers, and they could probably pass on the losses then to the customers as well, and that is where we can see a differentiation in the price benefit?
I don't think so, because that will be possible, because the vendors for real estate, for the builders and the real estate industry, will have to be GST registered. And if they are saying that they are passing on higher input costs to the consumers, then it will come around to the problem that what had happened was in the earlier case. So the questions will be raised whether they were not actually passing it on, because if they were passing it on, then the prices should have come down earlier. That they did not, and that is why these rates have come down, have been brought down to a level that it cannot raise cost of houses. Even if it doesn't come, I don't think prices of houses will go up. The other thing that this will do is that there is a lot of inventory in the market, and in a completed house, in a ready to move in completed house, GST is not applicable. What is applicable is stamp duty. But in under construction houses, it was said that because of high GST rates, the demand for under construction property was coming down, and people were probably more lured towards or attracted towards buying a completed house because there was no GST applicable. It is now believed that because of a lower GST rate, the demand for an under construction property will go up.
All right, and now let's talk about the affordable housing segment, since that also contributes like a huge chunk of the unsold inventory, about 50 to 60%. So do you think all the fence sitters will also now jump in and take the benefit, and all that inventory could also fly off the shelf?
That is what the intended target is probably, and that is what they intend to achieve by lowering these rates. At least the real estate industry is hoping that the lower GST rates in the affordable housing segment will push up demand. According to one estimates, there are about 5.8 lakh unsold houses in the entire country, out of which about 30 to 34% are in the affordable housing segment. Our affordable housing segment, in the sense that it falls within the price cap of the affordable housing segment, that they're priced at lower than 45 lakh, or they're priced around 40 lakh rupees, which is the price cap incidentally the government has used for defining affordable housing. One is the price cap, the other is the size and the carpet area. For any house to be eligible to be eligible to be defined as an affordable house, will have to be priced at 45 lakhs or below, and for metros the carpet area should be limited to 60 square meters, whereas for non-metros it should be limited to 90 square meters. But estimates do suggest, and and industry experts that we have been speaking to say that about 1 in every 3 house at least will fall within the this price cap, which will make them eligible for lower GST rates within the affordable housing sector.
This can also actually boost the demand and definitely have the government achieve its Housing for All 22 target also soon.
Clearly, it's also aimed at that, and the Housing for All is a stated objective of this government, as we know, and it's part of the New India slogan that the government has launched a couple of years ago, that by 2022, when we achieve 75 years of independence, housing for all, everybody should at least have a shelter, and that is what the government intends to do. So one way the one necessary condition of doing that is to bring down the prices of houses, and that is why affordable housing has become such a big policy, has received such a big policy push from this government, and they are trying to bring down. The GST Council at least thought it fit that one of the ways to make it more affordable is to bring down the incidence of tax. That is why it has been brought down to 1% without input tax credit, of course. But even if input tax credit has been done away with, I would assume the final prices will have to come down.
Right. And about the demand and the sales, do you think this will boost the demand and sales only in particular areas or geographies or across India?
No, it should across India. The push in demand, at least for under construction, should go up quite a bit compared to the ready-to-move and completed houses, because GST rates have been brought down from 12% to 5% for under construction houses, and that is what the whole idea is, to push sales of under construction houses, which the real in the estate industry has been saying the demand has really fallen because of high GST rates, and there was a need to give a push, and this is one of the instruments that the government thought, or the council thought, is way of giving a push to the demand for under construction houses.
Right. But Gaurav, executives are also quite skeptical at this moment. They say that their positions are unlikely to improve much because they're still facing the cash crunch.
That is unrelated to tax, and I don't think even if you reduce GST, or even if you completely do away with GST on the housing sector, say GST on under construction is brought down to 0%. And for affordable, even if it is brought down to 0%, that effectively exempting the housing sector from GST, I don't think that is going to take care of the cash crunch, because cash crunch has got something to do with their liquidity positions and the way they have deployed the money that they had raised from the home buyers. And also it has the cash crunch of the property developers has also got to do what's happening in the NBFC industry.
Right, absolutely. And there is also one more factor which is keeping the costs up, and that is the rate of GST on cement, and that is still high at 28%.
Yeah, so
there's a need to come down.
Clearly, there's a strong argument for bringing down the GST rate on cement from 28, that existing 28%, and there has been several rounds of discussions within the GST Council whether it should be brought down. But there is also resistance from certain states who earn a very large proportion of their revenue from cement. So that resistance clearly is now seems to be stronger within the council, and the council has decided against lowering it. But at some point in time, over the next 6 months or so, I would assume the GST rates on cement eventually will have to come down from 28% to about 18% or even less, given the fact that the government has said that 28% should only be for exceptional items and which are not of mass use. Cement clearly is of mass use, and if you want to give a boost to the real estate industry, cement, which is the most important input for building houses, cannot be taxed at such a high rate.
Thanks a lot, Gaurav, for sharing with us all that insight. Well, the GST rate cuts are aimed at reviving the ailing real estate sector. What we do hope for is that it is able to boost the much-needed home buyers' sentiments as well. Moving on to markets now, Santosh Nair, editor of Moneycontrol, joins in with all the action in the stock markets and cues for the week ahead. Thanks a lot, Santosh, for joining in. Now, this week we witnessed geopolitical tensions escalate with Pakistan. How did the markets really react to the strike as well as the other developments?
Well, thanks, Sakshi. It was a volatile week at the markets. Investors were constantly reacting to the developments at the border. For the time being, India has scored a diplomatic victory, but investors are of the view that this problem is not going to go away in a hurry. Border tension is something that will be an overhang on Indian markets, at least in the short term. And there was the other negative development this week as well, that was in the form of the third quarter GDP numbers, which were below market expectation. Growth was the slowest in 5 quarters, and estimate for the year as a whole too has been lowered. So you're having a situation where there is not really much of a strong reason for investors to go out and buy in a big way, but there's one after the other, you're seeing some kind of negative news flow coming in there. So these factors could continue to keep the market in a narrow range for the time being. That's what most people in the market are saying, that you may not see any sharp downturn, because there is value at lower levels. The corporate numbers for the December quarter show some kind of a recovery, so you may not see a sharp downturn, but clearly you're not going to see a big upside either.
Right, Santosh. Now, this was also an expiry week. Were those in line with expectations?
Well, the focus is not so much on the expiry as it would be on the macro health. The third quarter GDP numbers were below expectations, but to some extent that's been discounted. But there are also indications that growth in the current quarter may not be all that great. So these factors are likely to keep investors slightly on the back foot. Now, the other worry which is coming to light is that retail inflows into the market seem to be coming down a bit. If you look at the net inflows into mutual funds, already many investors have now started closing their SIP accounts. Now, it doesn't come as a big surprise there, because returns from most equity funds over the last 1 year have been negative. So clearly there's some bit of anxiety among retail investors, but again this has usually always been the trend. Whenever the market is rising, retail investors come to put in money in a big way, but the moment stock prices are under pressure, they start pulling out. But ideally, if you're a long-term investor, probably this is the time that you should be looking at opportunities. There is a fair bit of value in at least mid and small cap stocks, which have fallen quite sharply over the last few months. In fact, most players are saying that it's already a bear market out there. So the way you should probably try and approach this market is to look for opportunities instead of closing down your SIP accounts.
All right, Santosh, and what are the big cues and triggers to watch out for in the coming week then?
Well, Sakshi, news flow from the border and probably crude oil prices, these could be the two key triggers for the market in the short term. Most investors are already in a defensive mode. They don't want to commit in a big way. So you could see indices moving in a narrow range, at least in the foreseeable future. Mid cap and small cap shares could see some more pressure, because if retail inflows into mutual funds continue to dry up and there are redemption requests as well, you could see some more selling coming out there in these stocks. On the whole, expect range-bound movement for at least a few more weeks.
Thanks, Santosh, for sharing with us all those details. And with that, it's also a wrap here on the Money Control Show. But you can catch up on all the news from the world of business and finance on our digital platform, moneycontrol.com. Many thanks for tuning in.